Hello and a very warm welcome to Investing in REITs, a special conversation exploring how India's real estate market is undergoing a significant institutional transformation. Today, we focus on institutionalizing real estate, the REIT shift. When India's first REIT launched in 2019, there was curiosity around whether commercial real estate could truly evolve into a transparent, regulated, and mainstream financial asset class. Just a few years later, that shift is clearly underway. REITs are not only changing how investors participate in real estate, but also reshaping the sector itself, driving higher standards of governance, disclosure, financial discipline, and professional asset management across India's commercial property market. At the same time, there is a growing appeal for India as the long-term destination for global capital, multinational occupiers, of course, the GCC expansion that we've been talking about. To understand this and a lot more, we are now joined by Abhishek Agrawal, the CFO of Embassy REIT. Abhishek, thank you so much for joining us on the show. The first REIT in the country, that was a historic moment for sure in 2019. But, people were skeptic. What does it mean whether commercial real estate could really make that leap? Because everyone focuses a lot on residential real estate. So does commercial become the mainstream financial asset? How have things changed over the last couple of years? We have seen record high absorption. Then we also saw COVID. We saw work from home. So a lot has happened in the last few years.
Yeah. So one major point is that people used to always invest in real estate and seldom invested in commercial real estate. It is not because they did not want to. It's because people always knew that this is inaccessible. This is something which was always considered as for the haves and for big institutions or super HNIs, because the kind of investment that was required and the kind of risk profile that was there was enormous. Look at it this way. Like if somebody has to go and get a grade A building in one micro market, it used to be 1,000 crores, 800 crores to the tune of that. How many people in India had that? And the second thing is, if you buy only one asset, then the problem was that you don't diversify. You have the risk of that micro market, that building, leasing of that. And then there was immense amount of difficulty because you have to manage the brokers, you have to manage the upkeep, the asset management of the building, getting tenants, and then if the tenant goes away, then getting new tenants. And at the end was liquidity. You've bought one asset, let's say one floor of a building. Now, how do you sell it? The liquidity was not there. So people used to distance themselves from commercial real estate while secretly wanting to invest in that, because everybody knew that India's commercial real estate story is booming. And if India has to become like 5 trillion economy, then this has to go up. Now what has happened is REITs have democratized it. Anybody, even somebody who has 500 bucks and wants to invest in a REIT, which is the best commercial market in the country, they can invest. That's a change because of the benefits. One, it makes commercial real estate accessible. The second thing is liquidity is there. If you want to sell a REIT, you can sell it like an equity. You press a button, next day the money is in your bank account. So that kind of thing has happened. Diversification has happened. Let's say, for example, today Embassy REIT owns 51 million square feet over 5 cities in the country. Now that kind of diversification is there. Even if, let's say, one asset is not doing very good, still the investor can get good return because all the other assets will compensate for that. So all of those now have changed the whole geography of commercial real estate investing in the country. Retailers are coming in. When we started in 2019, there were only 4,000 investors, which included most of it as FPIs, foreign institutional investors. Now we see that more and more domestic institutions are participating, like mutual funds, domestic mutual funds. Also HNIs, family offices in the country and retailers have started participating in that.
And SEBI calling it an equity now has also changed the way mutual funds invest into REITs as well. Absolutely. What about regulation? You did indicate, of course, it's easier to give that 500 bucks to the REIT and own a part of the property. Has regulation been in accordance with the kind of interest that we are seeing from retail investors?
Absolutely. So the regulation has changed a lot and to the betterment of the REIT, and SEBI has done a fantastic job in that. Because let's say, just to give you some example, REITs now have been classified as equity. So that gives an indication to the retail investor that it is not like a bond. It is not like a guaranteed income. It also has a feature of equity where there is a risk and there is a return profile, both of them. While REITs sit in the middle of equity and bond. The second thing is that, let's say, you think about the investment. When we started in 2019, the minimum ticket size was 2 lakh rupees, which came down to 50,000, and now it has come down to 1 unit, like an equity. So
Yeah.
that has been in parity because more and more retail investors are coming in. SEBI has been taking that stand, and they have been making real estate investment so easy through the REITs.
That's true. And when the tax change came by, of course, we discussed that in greater detail as well. What about global institutional investors? You, of course, indicated FPIs were the big investors when you started out. They're seeing India as a long-term growth market, barring what's happening in stock markets right now. How have REIT structures been? What kind of, I would say, contribution are you seeing from FPIs? Has it gone down the way we are seeing in stock markets otherwise? Or that continues in this particular segment or asset class?
So that's a very interesting one. See, actually, when you see the numbers, the proportion of FPI investment or foreign investment in REITs is going down. And the reason for that is, let's say you can talk about currency depreciating, all of this. But one of the major reason is the domestic guys, they are coming and buying in bulk. Let's say if a foreign investor had to sell REIT units in 2019, there was another foreign investor who was picking it up. But now the domestic mutual funds, HNIs, family offices, they are picking that up. And hence we also see some reduction there, that FPS in total amount it may not be, because the REIT space is also increasing. Earlier there was only one REIT in 2019. Today there are 6 REITs. The market cap has gone to more than 2 lakh crores.
Correct.
The asset under management is more than 3 lakh crores. So that's the reason why you see that there is still lower participation from FPIs, but more and more participation from the domestic guys.
Okay, so domestic investors are the ones showing a lot of confidence. What about the growth that we're seeing in commercial real estate itself from an embassy perspective or from a segment perspective that we are seeing? What are some of the growth drivers? We have different segments. You know, when it was COVID, people are worried. IT companies are asking everyone to work from home, be it not IT companies, any sector for that. We bounced back really well. And now we are at what, 80 million square feet of absorption in calendar year 2025. What continues this growth for the commercial real estate market? Is it GCCs? Is it other segments? What's your understanding been?
So one particular thing which I want to say is that 2019 was a record year for leasing. Now 2025 calendar year became the record year.
Yes.
The expectation of IPCs in the country is that now 2026 will beat 25 and 27 will beat 26. So that's the kind of expectation. Now where are they getting this confidence? The tailwind is actually coming from GCCs. Now, GCCs are sector agnostic. They don't belong to one particular sector, be it BFSI, be it tech, be it pharma, be it engineering. There can be a GCC of any of these sectors. What is this GCC? Basically, earlier what used to happen is Western companies or big companies of the West, they used to outsource some of their work to Indian companies, which was base level work. During COVID, they understood that if somebody is sitting out in, let's say, Dallas and doing the work, which is in the head office of, let's say, New York, while somebody sitting in India or Vietnam cannot do it. Tech talent in mass, STEM talent was available only in India, and hence these guys started. Now they have set up their own office here, which is known as GCC, and they are not doing the ground level job anymore. They are doing the higher level job like R&D. They are using AI talents. They are doing engineering work, designing work, and hence more and more GCCs are coming into the country from all the sectors. It's not only the tech, it's other sectors also, and like pharma. Somebody is setting up their shop here to do the job of R&D sitting in the country, and hence this is just being a tailwind. Now the second part is that if some company opens their shop here as a GCC, a small GCC will not make commercial sense because they want to get that edge over it. Because they have to exploit the arbitrage. Arbitrage is twofold. One is the talent salary and the second one is the real estate. If they have to do it, they have to expand. And hence all these GCCs are bloating up. They are expanding. There is a report which says that today we have 1800 GCCs in the country, expected to grow to more than 2500 GCCs by 2030. And it's not only the top companies. It's not only Fortune 500. Now the trend has changed. The mid sector, let's say Fortune 1000 or 2000 companies are also coming in because otherwise they lose the arbitrage there in their home company. So they will not be able to compete. They will be wiped out. So they have to come to a low cost location. And hence
India is
this
the place.
tailwind. And India is the place because of the talent availability.
Okay, take that point. A lot more questions, but we'll quickly do one thing. We'll get into a quick commercial break. When we come back, we'll continue our conversation and understand more about REITs, the global capability centers, how are they the biggest tailwind, and a lot more with Abhishek. Welcome back. You're still tuned into Investing in REITs on CNBC TV18. We are in conversation with Abhishek Agrawal, CFO of Embassy REIT, discussing the REIT shift and the growing institutionalization of India's commercial real estate market. Before the break, we spoke about how REITs have transformed transparency, governance, and investor participation within the sector. Let's now continue the conversation. After talking about GCC expansion, let's also talk about some of the other spaces that must be contributing to that big growth that we've been talking about. So let's talk about beyond GCCs. What are some of the multinational occupiers and global tenants viewing India as today? Is it just a GCC demand, or we are seeing extended periods of lease contracts come by from other MNCs? What are the other sectors that are contributing? Of course, GCCs have multiple sectors under them, but is there anything which is beyond GCCs which is a big contributor?
Yeah, so what's happening is any multinational company, which is a foreign company and setting up their shop in the country, we call it GCC. So largely, if you call GCC, all multinationals are covered. But what we are also seeing as a trend is that Indian domestic companies are also taking more and more spaces. Let's say there's a startup culture. So a lot of startups are also coming in, which are growing. If India is growing, all these companies are also growing. They are also taking space in grade A assets because the premiumization of Indian real estate is happening. Now, what these, let's say, startup or early stage companies, what they are doing is they may be taking space through flex office. So flex office today is taking a lot of space. Let's say around 20% plus of the total leasing of the country is taken up by flex office. All of this is not domestic demand. It also has a major portion of GCC demand, but it also has a domestic demand. Now, when they are coming in, they don't have space. So they are also going to grade A developers like us, taking the space. So there is a demand which is coming from there also. And then there are a lot of other Indian companies which are taking the space.
Okay, so it's Indian plus MNCs together fueling the growth that we are seeing. Let's talk about India as a REIT market. It is not as deep. Of course, it's growing. It is not as deep as we compare it to US markets and even other Asian markets for that matter, be it Japan, Singapore. But market cap is growing rapidly. How do we compare it across the globe? And what is the kind of growth that you are anticipating going forward? More REITs expected? Will it be real estate, I mean commercial real estate, or are we seeing it across sectors?
So one thing is, when you talk about the office sector of the country, yes, it is comparatively smaller than all these developed countries, but it is growing rapidly. Like today, if we speak, we have almost around, let's say, 850 to 900 million square feet, which is, and the total REIT space that you have here is almost around 200 million square feet. So it is almost less than 1/4, which is in the REIT. So there's a lot of potential for the REITs to grow. Every year, we see almost 40 to 50 million square feet of grade A development, which is coming in. That's the supply which is adding to this 850, 900 million square feet, which we are seeing every year. Now, the second thing to understand is that REITs are not confined only to office spaces. There can be various other things for which you can have a REIT. Let's say everything which you can rent out, be it data center, be it warehousing, be it logistic, be it hospitality, be it hospitals. So there can be various other sectors which can get into the REIT system. Today, we are into 6, REITs. If you look at, we have fairly small history of REITs in the country of 7 years. But in this 7 years, we have reached from 1 REIT to 6 REITs. Now, this is growing by, let's say, 1 or 2 REIT every year. We think this trend should continue. And in the next, let's say, 5 years, we can see another 4-5 REITs which can come in this space. And then maybe multiple others in the other sectors which I was talking about.
Interestingly, you said 40 to 50 million square feet of supply is coming when last year the absorption was 80 million square feet. So are we seeing more demand than the supply right now? And considering that we have a lot of residential real estate builders, but good grade A quality commercial real estate builders would be what, like 11, 12 in the country itself?
Yes.
Is this something which the gap which will also get narrower as we go forward with more flex, with more REITs coming into the picture and more addition from commercial real estate players?
Yeah, absolutely. But one thing which everybody should understand, that when you talk about this 80 million square feet, This is gross absorption. It also includes, let's say, pre-leasing and renewals. So net absorption, if you see on an apple-to-apple basis, it is somewhere around 55 to 60 million square feet.
So we're meeting.
So we are meeting. The vacancies are definitely going down for grade A assets, but this is the whole market. But if you look at only grade A assets, the vacancy is going down, the occupancy is going up. Can we actually meet all the demand of all the GCCs that is projected to come in the country? Maybe we'll have difficulty. Hence, more and more grade A supply is required in the country.
Okay, so that is something that has been on the cards for a lot of builders, right? To bring in more grade A supply to the market. But with everything comes its own risk, right? We saw that post-COVID, vacancy levels shot up considerably, but then they came back with a bang. What are the risks that you're seeing right now for commercial real estate? What happens when interest rate cycle changes? How does that impact the returns for an investor for something like a REIT?
You've perfectly picked it up. There are two major, I would say, risks that can happen for a REIT investor, for a REIT. The number one is the interest rate cycle. Now, if the interest rates go up rapidly, what can happen is the distribution can reduce because the distribution is after paying the interest. So the distribution amount can reduce. Also, the expectation of return changes because if bonds and FDs are giving higher return, then the return expectation of a product changes and hence REIT's price also can come down. The NAV can come down a bit. But will it be a very big driver? It may not be, but that is a tangible risk which is there already. The second risk is the occupancy goes down, which we saw in COVID. But what we also have to understand is that all these leases which the REITs are doing are long-term leases with best quality tenants, which is multinational companies in the world. And these companies during COVID also paid full rentals. And hence the rental expectation, reliability of rent collection is there. But if a situation like COVID happens, there can be a reduction in the occupancy. That's a genuine risk which can happen, which we've seen. But I mean, there are questions that can a COVID-like situation happen again?
Let's hope not.
I mean, hope not. So that's the reason why that I would put it as a second risk.
Okay, so interest rate cycle, of course, the cycles keep changing. We really genuinely hope COVID-like situation never comes back again. Last question before I let you go. How does the rental escalation and rental cycle work for long-term contracts or short-term contracts? Because we keep seeing geopolitics change a lot and that changes the entire supply side or the demand side economics.
Yeah. So what happens is in the country, there's a standardization of rental escalation and the market works like this, that there will be a contract of 10 years wherein 5 years is lock-in and every 3 years, the rental escalates by 15%.
Okay.
In some geographies, this rental escalates by 5% every year, which is in the similar bandwidth. But what we are seeing, and at least in the last 10-15 years, what we have seen is the market moves even at a higher pace than this. And hence, there is something at the end of those 10 years, which is known as MTM, mark to market. So mark to market is happening. Now, this mark to market is basically generated from the concept that the leasing demand is outpacing the supply. And also, there is a premiumization because the tailwind is coming from GCs. The demand is actually coming from GCCs who want more and more premium spaces. Now, the rents of those premium spaces for sure will be higher. They want more of integrated space, which is park campus style offices. And hence, the rentals are also increasing. We saw like geography like Bangalore, Hyderabad, the rentals have outpaced the escalation.
Yeah, you spoke about it in your presentation. 25% is the opportunity for MTM, but of course, that's a different conversation altogether. Abhishek, thank you so much for joining us today, explaining us the macros of REITs, making us understand the asset class and the stakeholders, what it means for them when they invest in an asset class like this. So thank you so much for joining us. We discussed evolution of India's REIT market, the future of institutional real estate investing, and that brings us to the end of this special CNBC TV18 conversation on the REIT shift. Thank you so much for tuning in and stay tuned to CNBC TV18 for more news and updates.